Hi everyone, Leonardo at MarketCrash.money. Today I wanted to share with you a interesting observation. Thank God for Bitcoin. I have been able to use it as a good indicator of what the market is going to do next. And as you probably know, Bitcoin is dropping again. And this is what I'm observing. Last time Bitcoin was dropping to a level of 6,000. Actually, it breached the level of 6,000 briefly on February 5th, 6th. It went as low as 59.87. What was interesting that day, it was bouncing much higher the same day, sharply higher on huge volume. Now that it is reaching the levels of 6,000 to 6,500, it is no longer doing that. The same observations were taking place when the market was falling to a level of roughly 23.5 on February the 9th. Notice the striking similarity. There was just a 4-day difference between Bitcoin reaching its low and the markets reaching its low. Now, of course, on February 9th, that was the day when the markets dropped about 1,000 points, and within the same day, they actually ended up being in the positive territory. So there was a huge bounce on huge volume. Now we're noticing that as the markets are approaching this level of 23.5 to 24,000, we're talking about Dow Jones specifically here, it is no longer doing that. In other words, we're not seeing a huge volume on the way higher. Let me show you some specifics. All right, let's take a look. This is when Bitcoin went right here to 59.87. You see right here how huge the volume was. This this green part right here where it says Bitcoin volume, I'm trying to point this area right here. The volume was huge. Out of the entire graph, you can see that this volume, the green volume, exceeds by far any other volume on this Bitcoin chart. So as Bitcoin was hitting its all-time low, not all-time low, but all-time low in context of where it was over, the course of last few months. So we're seeing a huge bounce right here on high volume, and after that, of course, it goes much higher, tests the level of 11,000 twice, then it falls. But the most important part is when it falls this time, clearly we're not observing, as I'm recording this video, it's in the 6,400 range. What I am observing is it is falling on much higher volume. And this could actually be observed throughout the chart as it was falling from 19. It's fallen on a high volume. Over here it's fallen on a high volume again. Over here it's fallen on high volume. And all the bounces back, with the exception of this one, when it hits this low of 59.87, they're followed by a much lower volume. So again, we're observing where it is falling on much higher volume. And as it gets to this level, buyers are no longer in a rush to step in and buy it up like crazy. Now, of course, what we may be seeing is the fact that this level of Bitcoin traded between 6,000 to 8,000 at this point. And the question is how long it's going to stay in this range. If there's going to be no significant buyers coming at this level, this could be indicative that this level right here of 59.87 could be breached over the near future, over the course of the next couple of weeks. In comparison, again, this was on February 5th, February 6th. The market ultimate drop on February 9th coincides again with significantly higher volume in relation to the sell-off volume. Where this is the black dot right here where the market sells off completely that Friday, February 9th, and then it bounces back the same day, which is a very, very bullish signal here. As now we're approaching these same levels here, we're no longer observing high volume. In other words, the buyers are not rushing in to buy up these stocks in this range as they were on February 9th. All right, clearly, if we're to analyze the volume in the same range, in this 23.5, 24,000 range, we're seeing a lot more volume on the way lower, which is what this red volume right here represents. Now this thing sticks out here a little bit, but this high volume was actually pertaining to the move that was taking place right over here. As you can see, after that the market gapped down significantly and it's been trending lower. So what do we make out of this? Let me show you a couple more things here to make things a little bit more clear. And so just in case someone is having a hard time observing the volume, I made another chart here for Bitcoin, right? Again, this is Bitcoin's highest volume around February 5th, February 6th, when it falls, but they're using this as a huge opportunity to buy. And this is sort of what's taking place, right? This black point represents this point of 1587. And after that it moves higher and it keeps going higher. As you can see, the point I'm trying to make here is look at how huge this volume is. Again, if you look at any other volume on this graph, this is the highest point in volume. And as we're approaching this level again, 6,400, getting close there, we're seeing more selling that's taking place now when we're comparing the volume to the buy volume. This Bitcoin pattern that I am observing, and this pertains to the move of Bitcoin from this level of 5,900 on higher volume. It's reaching twice the level, which I've talked in some previous videos over the course of the last month, where I've been talking about this as a double top. Now, what I'm observing now is a much more bearish pattern that I would describe as head and shoulders. So again, we can take a look at this, and the characteristic of the head and shoulders, when you look at the left shoulder, which I would characterize this as a left shoulder, the volume in the left shoulder is always higher than the volume in the right shoulder. And typically when you would describe the part of the graph that would represent the head part of the head and shoulders, the volume on the way higher would be declining, and this is exactly what we're seeing. So as Bitcoin tries to hit these levels of 11.5 right here, we clearly see that it's doing it on lower volume, as represented by this little smile in the volume right here. So this is your left shoulder, this is your right shoulder, and please observe what happens, okay, in this bearish pattern when Bitcoin creates this right shoulder. Okay, again, the volume here is diminishing in relation to the volume in the left shoulder. It falls roughly 10%. Actually, so far, if we're taking this measurement from 8,000 level, it's not fallen exactly 10% yet. So I think it has further downside to about 6,000, 6,200. From there, however, we could see a significant fall lower. I'd like to compare that to the chart of AutoZone, which we're clearly seeing the same pattern, which is the head and shoulders pattern, where this would be the left shoulder, this would be the head on the lower volume, and this would be the right shoulder, followed exactly by a drop of about 9 to 10% lower. Now notice how similar these things are. You can literally see sort of, we call it the head and shoulders, but if you look closer, this is sort of like a face of a character, of a human being of some kind, where this is the smiley face, the eyes, this is more like the face. Okay, and this is exactly what I'm seeing. I've got more of a square eyes highlighted here, but same idea. Hopefully you're able to observe that. The importance of this is this head and shoulders pattern, they're very bearish, and they're, in my opinion, in my view, they're much more precise than a lot of other patterns. And since I've been using Bitcoin as an indicator of what's coming in the United States stock market, I wanted to give you two examples of what happened when I was able to observe this head and shoulders pattern, and how am I actually applying it in context of the United States stock market. Well, I'm seeing the same face here. I'm seeing the same character face when the stock market was dropping to the level of 23,000, 300, 500 level right here. It bounced on high volume, which created sort of right here this shoulder. Then, as it was trying to break out, just like Bitcoin did, right, twice, it created the head area, which it was doing that on much lower volume compared to the volume in the shoulder. And now in the right shoulder, we're seeing clearly the buy volume is significantly lower than in the left shoulder. On top of that, we're noticing that the volume is significantly increasing on the way lower. Where does this take us? Well, I think there is a 9 to 10% correction that is going to take place. Hopefully, maybe this graph is going to make a little bit better of an illustration. Again, this would be the left shoulder, the head with the volume diminishing as the market tries to go higher. This would be your right shoulder. And what you've seen in the previous graphs of Bitcoin and AutoZone, when we observed this head and shoulder pattern in the prior two cases here, AutoZone corrected 9 to 10%. Bitcoin has corrected maybe 7% with maybe another possibility of 3% lower. In other words, I am expecting a move lower in the United States stock market, which will be observed not just in the Dow Jones Industrial Average, but will be observed in NASDAQ and S&P. And if we were to use this level of 24,000 where it closed on March, okay, and if we're to use the same calculation, 9 to 10% lower, we could see a level of 21.7 roughly. Now, please keep in mind that these levels are not precise. In some of my prior videos, I went over some calculations where Dow Jones could actually go down to a level of 20,000 and a couple of hundred above 20,000. I was given another projection of how it could actually go to a level of possibly 18,800. Now, this represents my opinions, my calculations, okay? And even though I've been able to make some really good calls in the past, this does not guarantee that I'm 100% right. But I wanted to share my observations with you because I think there's definite some validity to this. I do believe in the head and shoulders pattern, and I do believe that it has a very high rate of probability. So now I've been off on the timing on some of my calls before. So this right here calls for a 9 to 10% correction in April. Well, it may happen in May, but I am noticing the trend, and I am noticing that the charts are there. A Bitcoin indicator has been very precise to me, and hopefully some of you will be able to take advantage of this reasoning in maybe some of the calculations that you're currently doing about the market, and hopefully this makes sense and brings some light to the picture to some of you that would care to know where the market could be headed next. Most of you are probably familiar with the typical strategy of buy low and sell high. Well, we could be in a market situation right now where the opposite is true. In other words, sell high, so you will have resources to buy low when the timing is more in your favor. But now, most of the retail investors, unlike the institutional advantage, don't take advantage of the fall-in. They don't short the market to profit on the market downward move. Now, the problem with that is this. The markets drop much faster than they go up. and huge returns are made by institutional investors and by the richest people on the world, exactly by profiting from the financial market's downward fall. I don't know why more individual investors do not take advantage of this type of circumstances. Maybe it's just the conventional thinking of buying low and selling high. And unfortunately, if you're buying right now, you maybe find yourself in a situation where you're buying at the ultimately highest level of the market over the last 10 years. So if you'd like to find out more on how to profit when markets do drop, on how to profit like institutional investors do when markets drop, get more information at marketcrash.money. Simply schedule your one-on-one consultation. Yes, that's correct. It is not going to be a webinar with 100, 200 other people. Okay, it's not going to be a pre-recorded webinar either. It is going to be a one-on-one phone call consultation coaching session that will specifically reveal 5 foundational concepts and principles that has helped me profit from the markets in the last 12 years. And I will be sharing with you specifically how I was able to use these foundational concepts and principles I have discovered in 5 simple steps, and how I was able to turn $12,000 into $466,000 in less than 7 hours utilizing these principles. Now, that is a personal record of mine. And on most days, you're not going to make that. However, the principles are timeless and they do work in this current market environment better than in the environment that we have seen over the last few years. So if you'd like to learn more, whether you're a brand new trader or whether you're an experienced trader looking for new strategies and ideas for this new changing market environment, schedule your one-on-one coaching session, take action now, and make your 2018 the most profitable year ever. Before you review any content on our channel website, disclaimer: the information presented is for informational purposes only, and none of the information contained therein constitutes a solicitation, offer, opinion, or recommendation by MarketCrash.money or any of its employees, officers, agent, guest speakers to buy or sell any particular security, to provide legal, tax, accounting, and investment advice regarding the profitability, suitability of any security investment. All investments entail a certain degree of risk, and financial instrument prices can go up and down based on any number of factors. Consult your financial professional before investing.